Well, it is Friday, August 30th. This is your daily financial news. I actually don't know when you're going to see this, probably sometime on Saturday, as we are in the middle of the ocean, heading back from Greenland to Iceland, and there's no internet. But I've already done my 2 pages of notes, so let's get into it. Today's big number is PCE. It is inflation. Inflation, again, we always talk about 4 numbers: headline, core, month on month, year on year. Here we go. Let's go with headline first. Headline came in at 0.2% as expected month on month, although it came in lower year on year. Folks, it came in at 2.5%. It was expected to come in at 2.6. That is good news if you are hoping for September rate cuts, folks. But the Fed talks core. Core is the most important metric. What did they say? Core came in at 0.2 month on month and 2.6 year on year, also below expectations. So with inflation trending lower, are September rate cuts on the horizon? I would believe the chances are higher and higher as we get more data points. We have 3 more data points. 3 more data points before the September meeting, and that is we will get a August jobs number next Friday. We will get CPI and PPI the following week, and then, of course, the Fed meeting. I will stand here and still call no rate cut, but let's be real, folks. The odds are ever increasing that the Fed wants to cut, even though I might remind you, remember our GDP print from earlier in the week? It came in at a revised 3%. So, again, I ask you, the economy, at least by the numbers, is humming at 3% growth, and the Fed is winning with inflation falling, and the weekly jobless claims number is not breaking higher. So I ask you, does the economy need rate cuts? Undoubtedly, certain sectors of the economy, think housing, think autos, think mid-sized businesses, plenty of the economy would love lower rates, but I mean, an honest question. If the Fed cuts and we get a second coming of inflation and they have to go higher, that is the worst case scenario. So my hope is in September they really look at the data and go, you know what? We want to be a little cautious. No cut in September. Let's go to November. But again, I am standing on an island all by myself. Let's talk about some other stuff going on. We got a bunch of earnings coming out. What does it say about the consumer? What does it say about the economy? How about Gap? Gap has had a rough year, although this past quarter they beat top line, beat bottom line, and hiked profit margins. So it looks like Gap's turnaround is starting to bear fruit. We talked about Dollar General yesterday and their, 20-25% drop. I am curious, is Dollar General's demise a sign that the consumers are in trouble, or is it just a sign that you can't buy anything for $1 anymore, or $1.25, or whatever they're putting out there? I really think it's maybe an inventory selection process, maybe more than anything else. Very interesting. We did get pending home sales yesterday, but I want to break it down for you because there's a story behind the numbers. First and foremost, you and me, we called this weeks ago, 6-8 weeks ago. We said we were going to break lower and we were going to break hard. Again, why? Well, demand. Buyers are constrained. Not only are buyers constrained because of interest rates and prices, they're just not in a mood to buy. Studying the consumer, you can understand what is going on. And again, right now, the election, the negativity, the noise, recession calls, it's got everybody afraid, and demand is constrained. How about supply? Well, again, supply has been rising every week. I believe that part of the reason it's rising is because of fake or stale or wish pricing. I don't know about you, but I look in my buy box and I can identify somewhere between 10 and 20% of the listings that has been on the market for over 100 days and has had 0 price drops. Folks, that is wish pricing. That is a seller that says, hey, if I get my number, I'll take it. How are we going to know those are wish pricing? because they will fall off when the listing agreement is done at 3 or 6 months. So again, demand constrained. We've got a bunch of fake supply. And most importantly, limited motivated sellers. If you are selling today, death, divorce, job transfer, tired landlord, it's just not a large population. They are out there. So here's the message. We called it right. We called transactions falling right. But what does it mean? It means it's time to write disrespectful offers. It's time to follow up every 10 days. It's time, quite simply, to do the work. Please, folks, find your motivated seller. They're out there. They're hiding. It's your job to go find them. Think about a motivated seller being Waldo, and it's your job to go, where's Waldo? There he is. Lots of offers, lots of follow-up. Keep doing the work. How about Lululemon? Lululemon cut guidance. Again, is this a sign that the discretionary spending from the wealthy is retreating? Could be. Could it be a sign that we got a lot of pull forward of yoga pants and whatever else they sell? Could be. Actually, Lululemon blamed it on a botched product launch. I would not want to be that product manager if that's what the CEO is saying, is we had to cut guidance because of a product launch. I don't know. We're going to have to pay attention. Discretionary spending might be falling. What are the hottest job markets? Folks, according to one CNBC article, the hottest job markets are Denver, Colorado, Oklahoma City, and Las Vegas, Nevada. Yep, Las Vegas, Nevada made the list. Question about the Yin Carry Trade. Remember that from 3 or 4 weeks ago? The Japanese raised their interest rate ever so slightly, which caused this cataclysmic reaction in the stock market that Monday morning. Could we have a Yin Carry Trade 2.0? What if, just hear me out, what if the Fed did something crazy and cut by 50 basis points? I wonder if that would be enough to launch the Yin Carry Trade 2.0, because again, when you shock the market, bad stuff happens. So again, something to think about. Again, I am not calling a rate cut. I'm just saying, hey, what if they did 50? Would that be enough to kick off the Yin Carry Trade 2.0? Excuse me. Ulta Beauty, missed top line, missed bottom line, and again, cut guidance. Ulta Beauty and Lululemon, kind of the same deal. Is it cooling beauty demand? Is it a botched product launch? Or is it just discretionary spending turning away? How about Dell Computers? Dell beat top line, bottom line on an 80% growth in server sales. Yes, folks, capital equipment or capital purchases for the AI revolution is going on. MangoDB beat top line, beat bottom line, and raised guidance. Again, a lot of stuff going on out there. How about the Eurozone? The Eurozone inflation dropped to 2.2% from 2.6. That's quite a drop in 1 month, from 2.6 to 2.2. What does that mean? Well, I think it's really simple. More rate cuts in the Eurozone. One of the things that I thought was really funny, you know those lawyers who defeated NAR and caused all this change in the real estate market? Well, it turns out they are going to launch a flat fee service. Yes, folks, you can go to them for a flat fee service. $49 to tour a home. $199 to review and write up offers, or get their full service package for $1,800. Folks, a lot of stuff going on out there. Again, I don't know when you will see this, but it's important for me to keep doing the daily financial news. Share what it's actually not that cold today. It's not that cold really, but it's the waves are moving a little bit. So, all right, folks, take care of yourself. We'll be back in Vegas soon. I hope you have a wonderful day. Later.